Good afternoon, Sifters. It is the week of January 12th, 2026. I'm Tyler Sherven with my co-host CJ Gettelfinger, who is he's getting married next week. He's got some big plans coming up, so a little break coming up, but we are happy to have you guys on for today's installment of the Weekly Sift Stack. And the other thing I want to note here is that if this YouTube episode or this clip hits 100 likes, in honor of the Bills Mafia this week, I will slam through a table. Guaranteed.
Tyler, I saw on Instagram, I am a little hurt. You know, you had to take down my Jags. I was really pulling for Trevor, but I did see a video. Some guy, he checked a table on his flight down to Jacksonville. Did you see that? He checked the Bills Mafia table.
I did not.
Saw that. It was funny. Yeah, it came down the carousel, and it just had Bills Mafia written on it.
Bills Mafia. Well, once I had this idea that somebody out there, genius, gave me this idea here. I started watching a lot of videos how to slam through that table.
There's nothing standing in Allen's way anymore. There's no Lamar. He already got through Trevor. There's no Chiefs. Yeah, no Mahomes. So this could be the year. Well, Tyler, hey, kick us off. Let us know how the markets are performing to start 2026.
Yes, sir. So looking at the year-to-date performance, this is the first time we're looking at the year-to-date performance for 2026, and this is as of January 9th market close. We're seeing the S&P 500 total return. We're having a strong year so far, almost at 2%. And then we're looking at the Bloomberg U.S. Aggregate Bond Index also, but we're seeing a both strong start for bonds and stocks. U.S. Aggregate Bond Index up 0.15%. Now, interestingly, Russell 2000 is leading the way at 5.75%. Now, this is an index that contains the U.S. stocks that have a market cap under 10 billion. And what's important to note about this is why this is growing is that there's an increasing confidence that with the lower interest rates that this is going to typically benefit these higher risk, smaller stocks and allows them to borrow cheaper and ultimately have better earnings as well. We're also seeing Bitcoin, as we talked about before. Bitcoin had a rough year last year. Bitcoin is up also almost 2%. So for all you crypto miners out there, I'm sure you're having a happy start there. But then again, right, Russell 2000, CJ, I know you're big with this, right? Some people are noting this as the great rotation. Have you been coming across
this?
This?
If you recall last week, that was kind of what I picked up on to start the year. As you'd seen in January 2nd on Friday, January 5th, when I had talked about it last year, you'd really started seeing a lot of those smaller cap companies really performing really well to start the year. And they're continuing. They're continuing that trend as we've seen 2026 to start. Like I said, kind of in my prediction, I think that you're going to continue to see that through Q1. I think that as you get more and more speculation that rates are going to continue to drop, like you were just saying, and you get more and more just, honestly, hype into the market as you get more and more retail investors, things of that nature, just looking for a lot of big growth, a lot of high return type of companies. I think that you're going to continue to see the Russell start the year.
And are you like foreseeing like a lot more folks, I guess, potentially locking in those gains on big tech
definitely.
over the past couple of years and then moving more into the small?
If you look at those dividends that you got from all of your capital gains dividends to end out 2025, right? Those were upwards of 8, 9, 10% in a lot of those high growth funds. So yeah, there's a lot of gains to be taken. They got to be putting them somewhere. And a lot of times in an environment like where we're seeing where large cap has just continued to lead the way over the past few years, some of these smaller companies do look a little bit undervalued, look like they have some good potential. And then the last thing I'll kind of talk about is as you continue to see consolidation, as you continue to see a lot of growth in the market, those are good opportunities for some of those smaller mid-cap type of companies where, they may get bought out or they may make big contracts, big agreements and deals with some of these bigger companies where all of a sudden maybe a company you've not heard of, and then here comes Google or Microsoft making a $10 billion deal with them, and things change and go crazy for them overnight. So I think it'll be a pretty good start to the year to continue for some of these Russell 2000 type of companies.
Hey, well, appreciate your take there, CJ. And I'm eager to hear your take on Capital One.
Yeah,
I have their credit cards. I have a high yield savings account with them. With Discover now being under Capital One, so I'm eager to hear.
This is definitely going to be I'm excited to talk about this for this week. So as Tyler just mentioned, we're going to cover Capital One for the stock of the week. So Capital One was really a steady grower in 2025. And like Tyler just said, there was a lot of excitement and really high expectations coming to the table when they finished the purchase of Discover back in the summer of 2025. And after they did that, they actually became the largest credit card issuer by loan value in the US. So, for those who don't know, Capital One, it did actually start solely as a credit card company back in 1994. So, it's been around for a little while now, over 30 years, and hard to say that.
I thought it'd be
Yeah,
more,
but they've
honestly.
they've been performing really really well, and they have even since fully evolved into a full service bank. Now, over about two
Hmm.
thirds, 70+% of the revenue does come from the credit cards, but they have started to kind of submit themselves as well and really get their foot in a little bit of everything. So, Tyler, with that, I want to start us off with a question for you. Do you know
Oof. All
what
right.
the total outstanding credit card balance currently is for the US?
For the U.S. Shoot, I know that a lot of people out there probably gonna be like, "Oh, I talked about this with him before. He should know this. It's going to be over. I imagine it's over $1
Yep.
trillion. I'm gonna guess around two and a half
Okay,
trillion.
not quite that much. You cut it in half. We're right around 1.25 trillion.
Okay,
So we're right around
1.25.
1.25-ish trillion in outstanding credit card balance currently. And so
Ooh, well, thankfully, I'm a little bit less than 1%
there
of
we
that
go.
credit
There
card
we
debt.
go. But with that, Capital One, this is why they've seen a really good year in 25. They hold around 270 billion of that. So about 20+% or so loan is
Hmm.
Capital One for that outstanding debt. And they added just shy of $1 billion with Discover. So that's really a big bolster to them. And you may have heard of the term net interest income. So what that essentially is for the company, whenever you're looking at a credit card company, that's really an important factor to look at because what that is that's going to be the interest on those card loans. So they added 98 billion in card loans when they picked up Discover last year, and that increased their quarterly revenue by over 23% and then added an increase to that net interest income of 25%. So there's a lot of growth there and there's still a lot of growth to come. Now, with that, another good thing when you look at Capital One is their balance sheet. Now, it is actually really well positioned. And, when you think of a credit card company or a company in the financial sector, right, you're always fearful of big drawdowns. You're fearful of economic recessions or turns. And with that, they're actually
Hmm.
positioned pretty well for any type of potential deterioration within the economy. Now, the one thing that they may not be able to withstand, however, is President Trump. So, with that, if for all of you who did not see the news over the weekend, Trump announced effective January 20th, so just 8 days out from recording, a 1 year cap on credit card interest rates of 10%.
Big news.
This is very big news. Tyler, let us get your thoughts. I want to hear your thoughts on this. And the reason that we wanted to talk about Capital One specifically today is in the pre-market last night, they were down about 10% since they've had a little bit of recovery. But as we're
Mm.
recording right now, I do think they're down about 7% during the day. So, Tyler, what does this mean? Let's hear your thoughts.
Well, my first thought I want to say, CJ, is despite that 10% decrease with Capital One, I'm glad you seem like you're giving me confidence because I have my high yield savings account essentially under Capital One. So that is good to know. Now, yes, very big news on the 10% interest cap. Theme of this decade, I think we could all say, in terms of economics, has been affordability. And Trump is certainly making a push on that affordability. So this is definitely going to put banks a bit of a bind. So credit cards, as CJ is just mentioning here, that these are a huge source of revenue for banks. And it's going to take a little while. This cap is going to require approval from Congress. And in the meantime, the major bank CEOs, other oppositional voices, they're certainly going to voice that there's going to be less credit opportunities with lower interest rates. And at the
Let
same
me let me
time,
pause
right,
you
that
right
this
there
is,
real quick. Because
oh,
that
go right
I
ahead.
think that's the most important thing to talk about. So when you're saying that there's going to be lower rates, give a little bit of a deep dive into that as to why that may be the case. Well,
Lower
why there may be
rates.
lower
Oh,
approval, right, for those lower rates. Because when you hear it, if you're
yeah.
thinking of it and you don't really dive into it, and you're like, oh, perfect, my credit card rate no longer is going to be at 30%. Now it's down to 10%. Well, then why is that actually potentially going to be a harder thing to pull off or a bad thing?
Yeah, no, I think that's a really important question there, CJ. So, credit cards, the reason why there's a variance in terms of interest rates is that in order for banks to survive and be profitable and accommodate higher risk folks that are taking on credit, they have to have higher interest rates for those
Exactly.
folks to accommodate them, right? And so right now, I'm sure all folks have a credit card that's like a 24% APR or a 25% APR, but then when that declines to 10%, it puts the banks into a bind. They have to change over a lot of operations and how they evaluate applications, or their current folks that have credit cards, to ensure that they're mitigating risk. Because as CJ mentioned, right, this is a huge revenue source for banks, and they have to ensure that this is going to be streamlined. And spending is a huge, huge part of the U.S. economy. 2/3 of economic activity. This is potentially a big deal. Now, me personally, I think that Trump is going to have conversations with both folks in Congress, and particularly the big bank CEOs. And there's certainly, I think, going to be moderation on this meeting in the middle. Now, later on, we'll talk about the other major news of the weekend was, right, Powell versus Donald Trump, now really heating up to the final innings here. And I think part of that is, as there's likely to be a favorable Fed chair coming up, or it looks like the administration could push for that even sooner with lower interest rates, that drives more spending, potentially more inflationary pressure, right? Now, on the backside of this, I could see how that lowering the credit interest rate cap to 10% would reduce economic spending, and then as well be sort of a yin yang force, a backstop to this measure of capping interest rates on
Yeah.
credit cards. Uh, CJ, you
Yeah,
got
no,
any
it
other
is.
thoughts
It's
on
one of
that?
those
I'm
things where if you
curious.
think about it, right, if you look at the numbers on, let's say that someone's got a balance of $5,000 at a 25%
Yeah.
APY, over a year, they're going to be paying over $1,000 to $1,500 in interest on that. Whereas, right, if you potentially cut it down to 10%, all of a sudden that cuts that down. And I think I saw a stat where it goes from like $100 a month at 25%, all the way you'd cut that down to like $40 a month, right? So you're essentially potentially saving, right, what Trump's initial plan and I think thought process is. Now, again, I think he knows this, and I think he's doing this strategically, because I think he also knows that this
You got to
can't,
push for
yeah,
it all in the
this
beginning
yeah, exactly. You
negotiation,
go
right?
for the fences, and then all of a sudden, the master of the deal, and you come in with a little bit of, you make a, what's the word? We Yeah,
Meet
me
in
in
the
the middle,
middle.
whatever that compromise. There it is, compromise. Maybe I will leave the chit chat in.
Compromise.
Right, you make a little
Yeah, leave that
compromise.
in
So
there.
I think he's well aware of that, because essentially, like you had just said, Tyler, and I'll bring this conversation to a finish. Is think of your bonds.
Oh, I think we
Well,
got to
think
add
of
on
your
a little more
bonds,
to it.
right? So think of like your high yield savings, like you had just said. High yield savings account, you're going to be yielding, currently maybe 3.5%, extremely low risk, right? So that's kind of the way you think about what you were just saying. Think of your people with like a credit score of 760, 780, right? Maybe think of that as like your high yield savings. And then all of a sudden you think of your high yield bonds, right? Your potential for those bonds to not even pay back. Well, you want higher return. You demand higher return for taking on that higher risk. So that's essentially what all the credit card companies do. That's why the rates are so high, like you had just said. I think the bigger
Yeah.
question that needs to be discussed is, you potentially will honestly run the risk of people getting their credit cards canceled. I mean, right,
Yeah.
because if this actually goes into effect and it goes into play, the credit card companies will literally overnight just look at, I don't want to throw out stereotypical numbers or anything right here, but let's just say, anyone under a 500 credit score, gone instantly, cannot apply, cannot no longer get a credit card. You literally can't. So then what that limits them. It makes it harder for them to be able to grow. It makes it harder for them to spend, and all essentially kind of what you're looking for, right? Because you still want that spending, like you were saying, you still need the spending. But when you put the
2/3
banks
of
in
economic
such a
activity.
bind, and you say, well, we're capping at 10%, well, then it makes it a lot harder for anyone to just be able to go apply for a credit card and get a credit limit. I'll say this, I'll end this here. If this does happen to go through, I think it'll be very interesting. I think it'll
Mhm.
probably see some bigger pull downs in the market and bigger pull downs for companies like Capital One, so on and so forth. I personally am not terribly worried about this. Now, I do think it is interesting that it's getting thrown out there. I do think there will be something come from it, whatever that compromise may be. But with it, if this does come to fruition, what you actually will probably see more than likely is, one, you'll see a lot of people no longer have cards or get cut off, and two, you would see your credit limit just go way down. I mean, drop way to the floor
Mhm.
of where essentially
Well,
you're going to have to pay it off every 3 days, with your expenses, and then reissue it. So it's a very interesting thought. We'll see what comes
oh
through
yeah.
it. But to kind of land the ship, like I was saying, Capital One in particular, they do have earnings. I know a lot of the financial banks have earnings coming up. They've got earnings on January 22nd. So I'm sure we'll hear a lot between now and then, like you were saying, with a lot of those CEOs, a lot of those big names. I'm sure there'll be a lot of meetings with President Trump from here on out. But uh,
We got a
we've
lot
got a
coming
lot
up.
coming up. All
Yeah.
in all, though, Capital One been performing really, really well in 2025. This is definitely something to keep your eyes out on. I personally am not too worried about this. You've seen, like I said, 6-7% pull down from it today. That's definitely
Yep.
understandable. We'll just have to see how more of this plays out.
Well, a couple quick tidbits I wanted to add on with what you said, CJ, is like, well, what is critical about a lot of those points you came up with, right, is that these credit cards are ultimately
Yep.
unsecured debt. So that means that unlike a mortgage in which the house is the
Yep.
security, right, or the auto loan, the car is the
Yep.
security. There is nothing
That's a
secured
great point.
against these
That's a
credit
great point.
cards. So that's why the interest rates are substantially higher than you
Yeah,
see in on even a personal loan, because right, a
exactly.
personal loan or a loan in general, it has fixed payment schedule. There is no schedule with a credit
Yep.
card. There's a lot of flexibility.
I mean, you can't, like
The
you
other
just said,
thing I
you
want
can't
to
even go get a personal loan for 10% hardly.
You can't. Well, the key part of that I wanted to mention was like this is where it feeds into those earnings, right? Because these are big banks. You're probably going to find better, like you just mentioned, 10% interest or more competitive interest rates with the regional banks or with credit unions. So if you're out there listening and you're like kind of frustrated with, I don't know, JP Morgan Chase or other ones, and you're like, shoot, where can I get a lower interest rate? Like, great place to start is a regional bank or a credit union, because they're going to be substantially better there. So that's why this is a very
Yeah.
significant
Yeah.
risk here. So we'll see
No, that's a
how it
good point.
all
I'll
plays
I'll end
out.
my last thing, right? Like you said, it would be very interesting to see if 2 years from now all this goes through and you have to go to apply for a credit card, and all of a sudden you have to connect your investment account and say, oh well, we've got to have it collateralized.
Yeah.
In case you don't make your payments, every late payment we take some shares of your S&P 500 away from you.
They come back, or they're just be like, they'll keep it simple, like, hey, you guys are just gonna have to all get in that secure credit card. It's like, well, jumping into the next weekly insight, right? So when the Fed gets political, Powell, Trump, and the fallout. So I'm sure we've been kind of seeing this as the big boxing fight that's been brewing for a minute here. The Fed chair, Jerome Powell, just over this weekend said he is under criminal investigation tied to a $2.5 billion renovation of the Fed's DC headquarters. And this is escalating tensions with President Trump amid these ongoing disputes over the rates, the interest rates, which of course, Trump wants lower. So Powell's position is that the probe is retaliation for maintaining Fed independence, while Trump this past Sunday has stated that he is not aware of the probe. So a lot to see on how this is going to flesh out. The market reacted with the S&P 500 down pre-market, but it's largely rebounded as of Monday, January 12th at noon. And then we did also see gold rally as that safe haven demand. So this is very big news. A lot we got to wait and see on how this turns out. So stay buckled up, folks. Now going into the big banks, right? So banks are leading the market. And as CJ just mentioned, right, Washington is entering the chat. So big banks, they're coming off a blockbuster 2025, record profits, surging trading fees. This has largely outpaced the S&P 500. JP Morgan is starting the earnings season tomorrow as Jamie Dimon. It draws closer to his 70th birthday. So if you can, send him a little birthday card. I'm sure he would appreciate it. Maybe a cupcake too. Following up next are the Goldman Sachs, Morgan Stanley, Citigroup, and of course CJ's Capital One, the stock of the week. So we're very eager to see how this turns out. We got earnings momentum, the easing regulation and rebounding deal activity. And there's hopes for lower rates that are setting up a strong 2026 case. But this means that the expectations are sky high. And of course, we just talked about that. We got the backdrop of this buffer to these valuations with the 10% credit.
Yeah, I'm sure that the CEOs are not looking forward to some of these earnings calls and just getting bombarded with a bunch of these questions that, I'm sure that they're going to be working on it. You'll hear a lot of news over this because Trump, like I said, he literally said January 20th. We're 8 days away from that. He tweeted it 10 days before. So it puts him in an interesting situation. I'm sure there will be a lot of news over this over the next 7 to 10 days.
We've had a very interesting January.
Starting off hot.
Starting off hot, and unfortunately starting off cold for the financial sector. We're as of about 1 p.m. on January 12th, 2026, we're seeing the State Street Financial Select Spider ETF down around 1%. So as CJ said, there's going to be added heat coming up for these financial CEOs. Next on the docket here, the post-Maduro surge. The Venezuelan stock exchanges has been ripping higher, and CJ, have you been buying anything in the Venezuelan stock exchange?
I'm kind of beating myself up for not noticing this earlier, but yeah, it's up. What is that? 300% last week.
Freaking crazy. So the stock market exchange for Venezuela, it has exploded with Nicolas Maduro's ousting last week, growing from 1,455 back in mid-December to now soaring above 6,000 as of January 9th, 2026. So pretty big explosion there. And then the last one that we're going over is Paramount. So Paramount is turning up the heat. Lawsuit, proxy fight, and a $72 billion media power shift. So Paramount just turned up its pressure again for its bid for Warner Brothers after the Warner Brothers board originally rejected the Paramount's revised offer, and they have fired back with a lawsuit against Warner Brothers and the CEO. And this is signaling that proxy fight to win over shareholders. So stakes are getting high here. CJ, what do you think how this is all going to roll out?
I think that personally, the way that you're seeing Paramount continue to push and push and push, and I know that they were, like you just said, disappointed at Warner Brothers for telling the shareholders to vote no on this. It just shows that the power that Netflix has, that if this goes through, what this could really mean for the media as we know it, and well, not media, but however you want to describe that.
Pretty much
however you want to describe
this,
media right? Netflix at that point would be all but a monopoly. So I think that's why you're continuing to see a lot of that pushback. But I don't know. I just think the longer this plays out, I think that this is going to be, like we said at the beginning, a couple years type of thing. This isn't going to be resolved anytime soon. But it does kind of show how if this goes through for Netflix, it may be game over for a lot of these other companies.
Yeah, I think it's going to be fleshed out in DC, fleshed out in the courts, and hey, it's going to be ripping the headlines for us.
Well, hey, Tyler, let me steal this one from you. I'm going to ask you the question first. The question for the week is, which of the banks do you think will perform best this earnings season? I always said the financial sector performed amazing in 2025. It's been under a little bit of heat and scrutiny over the past few days with what all we've been discussing. But we want to know, which bank do you think is going to come out on top for 2026? Will it be JP Morgan, Citigroup, Capital One, Goldman Sachs? Tyler, what's your thought?
I am going to go with JP Morgan, just systematically. I think they have everything in place, and they lead the financial sector for a reason. I think it's very hard to top who's on top of the financial sector since it's such a stabilized industry overall. Very difficult to top on them. I think so. That's my call.
I agree. I'm coming in with JP Morgan. I love Chase. I'm a JP Morgan through and through. It's where I bank. But
Jamie Dimon, baby.
But we'll see. I'll have to keep my eyes on Capital One. We'll see what all this interest rate cap comes out to be, and if things smooth out, I wouldn't be surprised to see Capital One continue to just push along.
Well, what surprised me about Capital One reading about it is that the CEO is also the founder. Um, it's a kind of unusual since most financial institutions have been established for so long. Capital One is relatively new, and that's why I think they've been able to make a lot of those big innovations with customer service, credit cards.
Well, hey, the Venture X, man,
and
they're the king. They know that we want our points. We want to travel. We want those flights.
Yeah. Hey, if you guys don't know this yet, CJ is a world traveler.
I am.
So he's
getting married in Puerto Rico and then
boost.
honeymoon in Vietnam. So going all over, using those miles.
Hey, Vietnam those are some of the best beaches.
Hey, last week's poll results. Tyler, you want to take this one?
Well, I'm a little bit too sad too, because I'm kind of heartbroken that the followers did not agree with me. 67% leading the way agreed with CJ that the stock market is going to be up 16.7% or go to 8,000. The S&P 500 is going to go to 8,000.
Hey, it sounds like the bulls are here to stay for 2026. Oh man,
they certainly are. Bulls are in full force.
Well, hey Tyler, to finish this off, as always, want to finish this with that quote of the week from none other than Capital One CEO Richard Fairbank. So many people spend so much energy showing how good you are, but it's not about you. Worrying about yourself is a bankrupt leadership model. I love that because it just shows, think less about yourself and more about others, right? If you're only worried about yourself, if you're self-centered, that's never going to get you anywhere. You got to make sure that you're worrying about everyone else 100%. Day to day, picking everyone else up, carrying the weight of everyone else. Again, I mean, if that's his motto and that's his quote, it's not hard to see why they've been such a good company and really been able to innovate and really grow since they've been started. So with all that, Tyler, it's been a great episode. Like I said, a lot to cover. With that, we appreciate all you listeners for joining into this week's episode of the Weekly Sift Stack, and we look forward to catching you all on the next one.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.